Good evening, and welcome back to session 9, testing a proof of concept. I am still doing my higher time frame candle. We're using the daily chart with a 30-minute zone. The two areas is 50% of the body or 50% of the wick, depending on how it plays out, how it looks. Although I think for a couple of these, I also looked at break retest areas within the 30-minute time frame as possible entries. So the entries I'm looking for are wick rejections, double bottoms, head and shoulders, and I think that's pretty much it. Let's get in, and as I said last time, I'm just going to go with the ones that actually triggered my alerts from yesterday, and we'll see how those played out. I'll try to keep a running tally if we could. I'll try to keep a running tally either in Notepad, or I might actually do it right here on the chart. So coming down to the daily chart, let's actually go down here and see what hit. So yesterday, I know as I was recording, we actually had a couple that had already hit particular areas, and was talking about what I would be looking for. And this one in particular, odd NZD, I was looking for multiple wick rejections. I was in my head, I was shooting for 2 or 3 wick rejections. 2 came in, and I was not actually, I'm not sure I was actually at the chart at the time that this set up, but even if that wasn't the case, if 2 was fine and I took it, then that's what I would have went with. But then I have to be consistent with all the rest of them as well. So for odd NZD, let's see. I will actually start keeping track of this. Odd NZD, if we have a 2 candle entry, 2 candle wick, two wicks per entry, but then also a double top. And I will show you that right here. So you have your first test here, push away, and then I come back to a second test that doesn't close above the area. So if this was not it, then it's possibly that one. With that being said, 1 to 3, break even at 1 to 1. It looks like either one of these would have probably been a break even to begin with, regardless if you went with the initial entry or the double top entry. Either one would have been break even. So I'll put break even for both. So we got odd NZD, break even for both types. So start there. Shooting for 1 to 3. We'll see how this actually plays out. Maybe if the management style changes and it's like a 1 to 3 no matter what, set and forget, which is helps with emotions, helps with handling and managing trades if you adopt the style of set and forget. But that's something that you've got to go through and test on your own to see if that works for you and your trading style. So NZD-JPY, I marked off and said, no, I don't like this area, the way that it shot down into this area, and it was just blowing through. At the time, I was not looking back at it, but it had eventually come back up. For candles like this, I generally look at that and sort of ignore it, thinking of it as like a wick. And so you have that twice with both of these. So if I were to look at this as a single event, price came down here and left. And so if we did that, that would be a double bottom, waiting for the close of this candle here, what stops a little bit above here and going for a 1 to 3. So this one actually would have hit if I was still actively monitoring it. I did come back after this happened I left everything on here and I'm like, oh, that's interesting because it immediately broke back in. So maybe it'll do something a little bit different. Um, but we'll have to see how that goes. So, or it actually looked like it would have worked out. So double bottom, um, and then a 1 to 3. And so that was NZD JPY, odd JPY. We're looking for a sell here. And this is where I'd have to, when I was talking about being consistent, if I was going to do double wicks, once again, trying to look at the zone, it's like, if you look at the daily, this is one of those really long wick rejections with a small body. And it was like, I don't know what to do with that. I had the 50% zone areas as a, like, should I mark up a 50% zone area or what does that look like? On the 30-minute doesn't matter because it didn't actually come down here. Although you could probably go with something like that. It still didn't matter because it still didn't come down here. But for if you're looking at price action and you're like, okay, this is a really strong wick rejection. Yes, it pushed bearish, but then bulls stepped in and pushed it all the way back up and closed it up in here with this area here. The concept of candles, previous candles going in the same direction is solid when you look at the different candle types on how it goes. Could you make a reverse of that in regards to candles on the way they close like this, that you have a higher chance of getting in the opposite direction? I think you could find that the case in a lot of them. I think you end up with what people tend to call like kangaroo tails and pin bars and things of that nature. Trying to think what pin bars, shooting stars, and I don't know what the other one is. So I mean, those are high valued candle formations, candle patterns. But it's not part of my trading, so I was still going with a sell on this one. So looking for here. So if I was to do the multiple wick rejections, then I would have to be honest and come here, stop above there. 1 to 1 wouldn't have been hit, so that would have been a loss. Even if I did the double tops, it would still be looking for a 1 to 1. I don't think that still would have been hit. So nope. So both of those would have been a loss depending on which one you were going for. So JPY, 2 wicks for entry, also double top. Both losses. Can I spell losses? There we go. So marking that down, tracking all this now. And this is something that you should be going through the charts doing on your own. So looking at GBP JPY, same thing roughly around the other one where it breaks down and then breaks back up. Looking at this area here, seeing how price reacts. Once you get this candle closed and this one coming above it and engulfing it, it's like, okay, if I'm expecting this zone to be it based upon previous price action within the last daily candle, then, technically it can't break this low here. And I have a flexible rule of in and outs. So if price breaks out, but then immediately breaks back in, once again, I'm looking this as like a tailed rejection. If you looked on the 60-minute, it would look like a pin bar. And so on the 30-minute, in my mind, that's what I have, and that's why I look at it like that, because on a higher time frame, it would look to somebody else like a pin bar, and if that is their entry signal, then you get enough people on the side, on the right side of that, and all of a sudden we're all going in the same direction. So this trade would still actively would be in. I don't think. It actually would have been break even stopped out at break even, unless it was a set and forget. So it would have shot straight up and then came back down. So for GUP JPY, we'd be looking at a 2-wick with engulfing. Wow, I can't spell to save my life. With engulfing, 2-wick with engulfing, break even. Really, I'm gonna have to turn the light on because I can't see my keyboard. Set and forget is 1 to 3. Let me turn the light on. There we go. Maybe I can't use the excuse of not seeing it anymore. Oh no, I said set and forget is 1 to 3, but this actually has not closed out yet. Set and forget, unknown. So we'll see how this actually plays out. USD CHF. USD CHF, the only thing we really have here in this area would be an engulfing candle. It would, you'd be the same thing. You're trusting in the concept that a candle can usually closes in the same direction as the previous candle. 1 to 3 would have been hit. So USD CHF, 1 to 3. CAD CHF. We have roughly the same thing, except we have a little bit different validation as far as a double bottom. This one was out here in the middle of nowhere, given price action in and around a zone. This one actually looks more like a double bottom, or what I would consider to be a double bottom. This is what I had marked up yesterday in regards to, okay, I'm just waiting for price to get back in here. And so I actually didn't play with it at all once we got here. So, and this is one of those ones that the zone that you're expecting or thinking price would come down to, because the 50% area is down here. So to be safe, move your stop loss down there, even though you're getting an entry pattern up here, and then still get in. And even though you have a bigger stop loss, you can see you still get a pretty solid risk to reward out of that. Let me go back to USD CHF and see if that was the same thing. USD CHF, about 50% of the area. See, we're caught in between both. So even if we came here, would we have hit a 1 to 3? The answer is still yes. So, this is how that plays out. And granted, if sometimes you feel you have to all play this as you go through and you back test and you forward test and see how it feels comfortable for you. If this was your entry pattern, all of a sudden price just wiggled around here for a little bit, you could close it at break even, because this level isn't doing what you expected it to, which was shoot it to the next higher high. And then basically look down here to see if, okay, maybe price is actually going to work its way down here before shooting up for the higher high. That's something you got to play with to see how it works. But you never know. So CAD CHF is a 1 to 3 as well. GBP USD, we have, so here's what we have here. Same thing. We have 2 different areas. This would be the break and retest that I was looking at, and then this would be like the final point of the downtrend. Anything beyond this, and it would more likely invalidate it for me. So then It's like, okay, if I'm doing wick rejections, then, this is roughly what you get. And would you have hit a 1-to-1? Yes. Um, if I believe that this is the wick creation, and now it's just going to roll over, that's it. 1-to-1 for that one. So for GBP USD, break even for 2 wicks. We just have 2 wick rejections, and there's no engulfing candle, there's nothing else, and that would just be a break even. Now, it's sloppy, but this is something you have to watch out for. If this was your pair, like you only have a couple pairs that you actually trade, and you've noticed that you have this run up here into roughly 50% of this zone. So if I were to throw on a fib from here to here, we get a 50% area, 50% retracement. So if you are hard pressed to do in and around the 50% retracement area, then you would have wicked into this area and then followed away, and then a second one. So if you were multiple wick rejections, depending on where you put your entry, you could either be sitting at a 1-to-1 right now, break even. Looks like it almost made it to a 1-to-2. If you are more of a double top perspective, then you would have hit your 1-to-3 easy. And so depending on, like, if you're looking for structure, you got structure. If you're looking for zone, you got a zone. How much, that works out, if you want to be, okay, well, here's the final zone up here, then you're still at a 1-to-1. If you came down here, you're still at a 1-to-1. So you'd be at break even. And the thing that you've got to get in the habit of doing is just taking solid trades. This is a solid trade setup based upon what I know as far as the concept that I'm testing. And so this is a viable trade to get in. It's the price action is respecting the things that I'm asking it to respect, or looking for it to respect, and I can put my stop loss in a safe place that gives me a solid enough risk to reward ratio that if I'm wrong, I would probably be we'd be at break even on this far stretch right now, which I think is the biggest play here. We'd be at break even right now. And so the best thing we've done is protected our capital. So no matter what happened here, I would say I'm just going to leave it as a break even, with the high hopes of one day that if you focus down to a single pair, that possibly entries like a double top, trusting your zone after you get a double wick or a double test off of it and it rejects, would give you a 1-to-3. So that's GBP USD. We're going to count it as break even. CHF JPY. So CHF JPY was one of those things. Again, we have this really small bodied candle, huge wick area. And so it's like, okay, what do you do with that? The only thing I have with this zone right here, with that, following the other lines of this is the wick, I'm expecting price to go up. We would have hit barely, maybe depending on spread, probably not, might have hit it here. So we may have been at break even on either one of these, or we may still be hovering around break even right now. So we'd either have gone to break even and been kicked out of the trade, or we'd be still hovering around the entry around break even, and still the idea of, well, we could get out if we really wanted to. The only other way that this would have worked out better for me is if you were doing something along the lines of double bottoms. Then you definitely would have been at break even, and you definitely would have been kicked out already. More than likely with spreads around that, especially here around the 5 o'clock time frame, because that's when spreads widen out for the New York session for my area. So CHF JPY, going to go with, let's see, right now break even. So moving on to CAD JPY. CAD JPY, once again, we're expecting the next candle to go up. If we're just doing single candles with an engulfing, price is down there. We're going for a 1 to 3. It came up really, really high. Set and forget, you'd still be in this trade. 1-to-1 break even, you'd be at break even right now. And if you were a little bit scared, you might have closed when you got close. Although you're looking at 17 pips after a 122 pip gain, 123 pip gain. I would say if you were watching the charts at 9:30, 10 o'clock Eastern Standard Time, and you saw this really sharp candle go up, that's solid enough to call it a day. So yeah, it's solid enough to take off there. And so we'll call that CAD JPY. Ooh, 1 to 2. Let's just leave this open. Leave open. Check back. All right. USD JPY. Looks like we got roughly the same thing here. We're looking for a 50% retracement. We got an engulfing candle. That's what I forgot to put in the other one. I'll mark that up. A little bit below the zone. And like same thing. With spread, you probably wouldn't have been kicked out. You'd have to close manually. So a set and forget, you'd probably still be in it, kicking yourself, wondering, hey, is set and forget really for me as it comes this close and doesn't trigger you out in your broker, depending on what your broker you have. And then you'd be questioning things as like, oh, should I shorten my stop loss? Should I make the zone a little bit smaller and more precise? That way I can get a smaller stop loss. Should I go ahead and take an entry on a break of highs and everything like that? Should I get on the second wick? Like you would be questioning all sorts of stuff, and you just got to make sure you don't. If you've been testing your system and you know that you have pretty high success rate, then trust in that. So both USD and CAD JPY had 2 wicks rejection with engulfing candle. This one, I will say 1 to 3. Set and forget. Still open. All right. So GBP CHF. This is one of those candles that had a really small body, but a wick area. And it's like, okay, this price area makes sense. Price came down here, tapped it, left. There's really nothing in here for me as a entry pattern. There's no engulfing candle. There's really no wick rejections that would say that this was going to be a level to be respected. It was respected, but there was nothing in there to show me that it was going to be respected. So GBP CHF, no trade. USD CAD. USD CAD, expecting price to go up. And so here we are again. We had, it was a messy candle. If we look at the daily, that candle is this one right here, which there wasn't really much to it when you get down here to 30-minute. And so it's really messy, and there wasn't a clean area to put in there. So there is an area, and it's like, okay, if I'm going to be true, then we get double candle wick rejection there. You stop a little bit below it, coming for a 1 to 1. We would have hit that before getting a break even. The other area that was down here was right here. And so if we go with it again, we get a wick rejection. we get a bearish candle and then an engulfing bullish candle. Get in there. We'd still be at a 1-to-1. You would have had to close early if you were watching it. But if not, then it would be at a break even. If you were at a double bottom of this particular area, technically that fits my criteria for double bottom. I would expecting price to be going up, low stop loss below the low there, and we would be going for 1-to-3. We'd be hitting a 1-to-1. We back at break even, and so break even for all of them, unless you happen to be at the chart when this one rose up really quickly, and you might have hit your 1-to what was that? 2 something, 2.3, 2 point something. So I'm just going to call it a break even for USD CAD. Odd CHF. Odd CHF. So here is where we have a little something. It's like, okay, I was expecting price to go down based upon the previous candle. Price came back up in here. We have wick rejections. Now, if we've been paying attention, if anybody's been paying attention, then my wick rejections, I wait for that reverse. I want that candle already going in my direction to count it as a wick rejection. And so I don't really have that here. Price goes up higher and does give it there. Would I have taken it? I don't know. Let's say yes, I would have. Let's say I would have adjusted my zone because I would have been looking, okay, well, 50% would be in and around this area. Whoa, okay, don't stay on my chart then. 50% would be in and around this area. And so it's like, okay, cool. So let's take that. We have a little bit above the area, just in case it's going to come back. And really, this one just immediately went and stopped us out. So odd CHF is a loss. And it's just 2 wick rejections and loss. There we go. I had to type that correctly. NZD CHF, we have the same thing. We have multiple wick rejections in the zone, expecting to go down, and both of them would have been a loss, whether you're looking at a double top, or which isn't really a valid double top. Yeah, that's iffy. But either one would have been a loss. So we'll just count that one as a loss. So NZD CHF, wick rejections. Euro AUD. Euro AUD, expecting price to go up. Going with the wick rejections again. Let's see how this would have played out. You have something right there. Stop loss a little bit below the level. 1-to-1 was not hit, so that would be a loss. So Euro AUD. Rejections and an engulfing candle. Loss. Euro CHF. Euro CHF, expecting price to go down. This is one of those small-bodied wick, 50% of the wick area. We don't have an entry. And then given price came all the way up here and broke way past the previous high, I'm not tracking anything like that. Euro CHF, no trade. Euro GBP. Euro GBP is a mess. Where do we go with that? We get wick rejections right there. So price came up, rejected. It would have been on the second candle here. Stop loss would have been here. It would have been almost an immediate stop out. So yeah, Euro GBP. Loss. 2 wick rejections. Euro USD. Euro USD. We have, that's 1 wick rejection, and it didn't come anywhere near the rest of them didn't come anywhere near the zone yet. So can't really count that one. So Euro USD, no trade. And if you look at these and you're like, nah, based upon your previous ones, you probably would have taken that. Let me know, and I'll go back and reassess. But right off the, right off the little rip, I'm like, nah, it doesn't look like I would have taken that trade. It, also trying to track that it's not just hindsight looking at what it did and going, yeah, no, that's ugly. Or yeah, based upon what happened, that I'm changing my tune. No trade for this one. You only have 1 wick rejection here and nothing else in that area. So GBP NZD. No trade. GBP AUD. It came into this area around 3. Expecting price to go up, but we have nothing here. So GBP AUD, no trade. NZD USD, expecting price to go down. We have wick rejections there. Now we're further, what are we at? 3 of the next day. See, this is like, we're getting pretty close to closing time. And, some of the other trades were already done at 10. Entries were either earlier in the morning or at least right at the morning time, right at New York Open. And now we are further along, getting really close to closing time. So it's like, no, because if it was going to make its move and close the way we expected, it should have already done that. So that is going to be the case with all these other ones. That is after this. GPUSD, that is a different alert. So this was that trade. I did call that one out because it kicked off right as I was marking up everything. And so there's the entry. We'd already be kicked out at break even. So NZD CAD was pretty much as soon as the candle closed, you were pretty much in the next trade because of that wick rejection. Somewhere in here, you'd have to watch out for spreads. But if that were the case, you would have already been kicked out. So break even, unless it was set and forget, and then you'd be close to your stop out now. And then odd USD. Why do I feel like we've already done odd USD? We haven't. Okay, odd USD is just now hitting. And so once again, it's like it's just now hitting. Actually, and so same thing with NZD CAD. NZD CAD is hitting well beyond. Neither one of these actually count because, well, no, NZD CAD would have counted for yesterday's, but the alert is a secondary. I don't know why it re-triggered. So that is that. So let's look and see what we got. So we have 1, 2, 3, 3, 4. We have 4 1 to 3s, which is 12R. And then we had break even, break even. We'll do two losses, unless your rule is one loss per per currency pair. There we go. So 2, 3, 4, 5, 6. One, 2, 3, 4, 5, 6. And then looking for CAD JPY. Where that one's at. Um, you're watching, once again, you probably would have already been out with 2 something. But if not, then we got that so far. So it's either a possible 15 or possible 7. So worst case, you're up 5R for the day. Best case, you're up 9R for the day. I think that pretty much covers that. Maybe have to track that one as well. So yeah, see how these ones are going. And yeah, we'll see. So yeah, so thank you for watching. If trading is your journey, then yeah, I hope you find favor in this and all the rest of your endeavors. And once again, I wish you to be well and God bless.